Good morning, everyone. This is Sonny. The market just opened within the last minute. The market is up today, as you can see. The S&P is up over 1%. The Dow, NASDAQ, everything's up, even oil, which is a good thing. But as you know, the market is overinflated right now. So, okay, let's cut to the chase here. Let's go look at our what's going on in our portfolio. Let's here reset here. Okay, our portfolio right now is at $24,692 and some cents. We started off with 24,000. So I wouldn't worry about the price is going to fluctuate because of these options or what's going on, okay, and the price of the stocks, okay, that we're currently in ET. Okay, I wouldn't focus on that, but it's a good thing that our stock prices are up and everything else. So, okay, all right, now let's move over to what we're going to be doing today. We got approximately $10,296 that we can invest. Okay. And as you know, we got, let's look at our tracker over here. Our distributions came through. $305 yesterday. So we picked up $305, which also helped our account. That's why our account went up. Okay. And we're still in both positions here of ET. Nothing has changed. Okay. So currently right now I'm looking at two stocks that we're jumping in. Actually, there's three stocks. There's AT&T, there's a cable company called CTL, and an electric company called AEP. Now, it's a possibility that we can pick up. There's three options with AT&T. I'll go through AT&T first. Okay, AT&T, let's see, this thing's settled yet. Okay. Sometimes it takes a little while for Yahoo to get their act together. All right, it's popped up beyond the $29 that I was tracking, but that's okay. That's okay. I'm not worried about that too much. As you can see their chart here, the only thing I don't like about AT&T is their market cap is a little bit pricey. Okay, they got a 7% dividend, but it's not going to be 7% in the future. It's going to be lower than that, and their market cap, and based on what they're worth, is about $13 billion off this mark here, and that concerns me. Okay, that means it can drop further. Okay, especially if we're going to stay in a recession long or a depression long. Okay, that's the only problem that I have with AT&T. Other than that, the options that I was looking at, I was looking at the quick profit on the 22 May. This is the 22 May, which is in 3 days. Actually, in 2 days. Today's Wednesday. And we could pull a 1.2%. This would be at the 29 strike price here. The 29 strike price somewhere around about 35 cents there, would be about $35. We'd pick up three options. We'd pick up $105, and we could pick up 1.2% just for this week, and then it'll be called away at the end of the week. And if it's not called away, then therefore we can roll it on out and keep the stock and make some more premium on it. Okay, or we can do the 29.50 on the the strike price 29.50 that expires on the 29th. Let's bring the 29th out here. Now, you don't always want to take your action when the market opens, especially when it opens this high, because it has to settle down somehow. So, let's see, the 29.50 give us about 35 there. It'd be the same deal. But then again, we gave it a little bit of room to grow, so we can pick up. So we'd get the same amount of money. It'd be a 1.2% return for waiting an extra week. But if we get called away, it's actually a 2.93% return. Okay? Because the value of the stock is only at $29, and there's a difference between $29 and $29.50. So that 50 cents, remember when we're dealing with options, we're dealing with 100 shares per option. Okay, so that would be an extra $50 per option. And then we have 3 options that would give us an extra $150. So therefore, we would collect a total premium, and the option of going up would be $255 versus only $105. You see what I'm saying? If we decide to do the $29.50 on this. Now, there is an option that we can do deepen the money again. I mean, we can stay at the 29 level, and we pick up, 50 cents or 55 cents, and pick up $150, $165 there, and then we'll pick up a 1.9% return for the 2 week, actually 1.5 weeks for 10 days, and then it'll expire worthless. Because we'll get called away if it's over by 1 penny of the $29 strike price. So we have a decision there if we want to take the AT&T route. I think AT&T is still pricey for this environment right now. But let's move on over to this cable company here. Let's go back to my financial home here. We go over here to the cable company, CTL. We didn't pick it up before. CTL. Okay, CTL jumped up a little bit. Okay, the price target I'm looking at was planning on the 950. Let's see, 958, but it did drop. It just jumped up here, which is okay. By the time we make our decision, hopefully it comes down just a tad. I really like that to happen. Okay, now one thing about these guys here, CenturyLink, the CEO stated that he is okay with the current dividends at 10.44%. So he says we're making enough money, we're going to continue paying our dividends, and it's cool. Okay? So he doesn't see any problems. They were kind of short in their sales or whatever on their last conference call, which they just had, okay, about 10 days ago. All right, here's a 1-year performance. As you can see, it took a hit too, took a dive here because how the market's going. Some of these stocks got hit pretty hard. Our PE ratio, price to earnings, at 8.65, which is underneath the S&P averages of 15 to 20 right now. Okay, the market cap is within reason. It's lower than the net worth of the company by about $3 to $4 billion, which is a good sign. That means they're worth more than the market cap. That means they have room to grow. Okay, and their earnings per share is $1.13 for the past year. So let's see, we're pulling in $1 off that $1.13. So they have enough cash, and they have plenty of cash. I looked at their finances. They have plenty enough cash to pay this dividend for the next year with no problem. Okay, so this one looks real good to me. It really, it's I mean, out of all of them, I think this is the #1 play for me. Okay, but we'll come back to it. Let's see some of the charts here. Let's see. Okay, let's go with the 29th May. May options here. Now, 29th May, I was looking at the $9.50 strike price. There's two options. We reference these options here. I mean, we can go with the $9.50 strike price, or we can go with the 10. The $9.50 strike price, I could probably pick up maybe about $340 off the strike price here. All right, the $9.50. The last price is 35 cents. I'm really looking at the strike 10. I mean, yeah, we could pick up that 35 cents. Will give us $350. That would give us somewhere around 3%. It depends on when we buy in, because I calculated a 3.65% if we would have bought in at $9.58. And because the market has jumped up by 20 cents, I would say that's about a 3% there. Okay, and not only that is, I wouldn't go after just the 35 cents here. I would try to get more or less to 40 cents. So I would try to get our 3.65% out of this. Okay, if we select this. But right now it's still at $9.77. So I really, yeah, I still think it's a little bit high. It went up 2% today. I still would select for the options. There's plenty of open interest out there. I would still suggest 40 cents or try to get 45 cents out of this puppy here if we go for the $9.50, because remember, that's going to be in the money because the current price is $9.78. So therefore, it's 28 cents in the money. Okay? Which I don't like that trade for right now. I would really like this trade better at the 20-cent level at the $10 mark, because this thing could shoot right up to $10 with no problems within a week. And we'll pick up $200. We'll pick up $200 because the price went up. Before we were only going to get like $150, but we'll pick up $200 because we're going to be buying 10 options. So, and if we get called away, we're going to make over a 5% return. Now the $200 is going to give us somewhere around a 1.5% return on our money for 10 days. 1.5% in 10 days. That is real good, guys. And so that's the strike price I would be achieving here. That's the best. That's the best plan there. We get our $200, and if it does go down to $9.50, not a problem. I'm not worried about it. If it doesn't get called away, it's no big deal. We'll turn around and put some more options against it and do some more covered calls. Because remember, they got a 10% dividend. Okay, that's a cool $1,000 that we're going to pick on the stock over a year period. Because it's $1 dividend. That's $1,000, guys. $1,000 off of paying, what, $9,700? I mean, that's 10% on your money in 1 year, just off the dividend. That's if the price stayed the same. I mean, you can't beat it, and then we're going to pick up some options along the way. As long as these guys stay and keep their profits going each quarter, you know, we'll have to watch them each quarter, and their next quarterly report is, I believe, is in August on this one. So this one is my #1 contender here. Now, we got this electric company called AEP. All right, let's check them out while we're over here in the option chain. Let's see here. Let's go back to overview for a second. Yeah, this thing still wants to go up today. Okay, AEP. AEP. All right, APEP was playing a little games here, huh? What's going on here? What is going on? Okay, it's down here. Over the past year, it's it's kind of like down here in the hole. But they got this 3.63%, but I still think this stock has some room to go down. The PE is at 20.88. That's why I'm saying some of these S&P stocks, their PE is way out there. Okay, when you're talking over 15, 17 PE, and they're not a tech company, we got a problem. Okay, and I don't recommend them because the price is going to go down. But then again, it's an electric company. They provide electricity. Okay, look at all this. We got hold, sell, hold, sell, hold, hold, hold. So that's what we have going on here for a lot of these electric companies. This one's in a hold category. So I'm kind of, and it says a 3-star rating. I don't know. All right, let's look at the options here. Let's make this thing real quick. All right, let's check the options here. All right. Yeah. All right, the option I was looking on here was a 77.50 right at the money and the 80 option. All right, we got two ways. Now, these guys only do monthly options. All right, this stock only has monthly options against them. All right, so 77.50 is currently going for somewhere around, you're not going to get 278 anymore. That was the last price because the bid and the ask is somewhere around, I would put in about 260. We can make approximately, remember, we're waiting a month out here. Okay, and this will be right at the money at the current price. We'd pick up about, it's a 3.3% return we'll get on that money. Now that's not bad either. I just don't like the pricing of that stock right now because I think it's overvalued. So I think this price is going to come down. So I'm not even going to look at the 80. We can pick up, if it gets called away, somewhere around 4 to 5%, but it's not even worthwhile. So the 80 strike price on this, I'm not even interested in. So, all right, so what we're going to do here is we're going to do an option here against the cable company because I'm not interested in this electric company right now. Not until that electric company drops in price, I'm not interested. Okay, so what we're going to do is we're going to go back here to overview. Okay, I'm going to come over here to trade. Oh, it's the wrong stock here. Let's put down CTL. The first one there. Whoa, this puppy has jumped up. Okay. All right, let's hit the trade. We got $10,296 cash available to invest. What we're going to do is we're going to do a buy right. CTL. Well, it's kind of high. But you know what, though? We're going to pick that 10 strike price here. We're gonna pick up some money here. It's no big deal. And if it goes down a little bit, it goes down a little bit. I'm not worried about it too much. Okay, we're going to buy 1,000 shares. Okay, this will be 10 contracts. We're going to expire on May 29th. Now the strike price we picked was 10. Whoa, they're giving away 20 cents. Yeah, because we wanted to pick up that $200. And that's what we're after. We're after that $200. Okay, now this is very critical, the net debt. It means you subtract 20 cents, because that's the price that you want to get it at the price that it's currently going for. So the current price that you want to get in here, see, luckily it's only 1 penny away from each other. Okay, so it'll be $9.82. This is the price that you normally end up buying at, normally at the ask price, but you try to get in between, but there's only 1 penny difference. This is very tightly niched here. Okay, so you subtract 20 pennies off of that, and you get $9.63. So this here should be $9.63, right? The net debt. Because this is the price you want it. You want it at 20 cents between these two prices, and off of that price. So let's see if the market has changed a little bit. It's still hanging in there. The price is not moving nowhere. We're good. All right, so 9.63 is fine. Okay, estimated loss. Well, they're covering, saying that if you lost your whole investment here. Okay, so let's preview order. Now you have to make sure that you got this contract right. You're selling to open, you're buying. You're buying and you're selling to open. Okay. And it's at your right strike price on your right date, and it's call option. 9.63. The estimated commission is $6.50 because they charge us 65 cents per option. And then we submit our order. The stock price did go up by a penny. And the order was executed. Let's see here. Let me check view status. Whoa, it was executed. The bid and ask was 9.61 to 9.68. We got it at 9.63. Now they charge us 1 penny because of the remember the service fee. They added that into that, so that's how they come up with that net debt of 9.63 instead of our 9.62 that we wanted it at. Okay, pennies do matter. Now, what we have to be ready on is if on Friday it decides the share price might drop a little bit because it jumped up. And we did the trade right at the beginning of the market. Okay. All right. That's okay because we're going to keep this puppy. Because remember, we're going to go after the 10% dividend. All right, let's get her back up here. Let's get back to the summary here. Yeah, remember we're buying on the highs, but you know what though? I'm not concerned with this because we're thinking long term. Look at these long term numbers. Look at this, these puppies, okay? This thing could go all the way up to $11 again. And based on the news that they provided, and they told everybody that this 10% dividend is good, I'm cool with that. Now that's 25 cents each quarter. All right, it's just like the profits that that the share price jumped up today. Okay, so it's okay. We're going to keep this, and we're going to chug along here. And this is the best company I could pick out of those three, and I don't see any problems in this. I'm okay. Really am. Now the analyst targets, they're all out here at 11.28. Yes, they have holds, and there's variance there, but hey, this puppy is something I really liked, and I've been watching this thing for a while anyways. This has been on my watch list, but I did not want to be in on any of this action here. I wanted to make sure she came down far enough, and this was good that we had this correction for this to happen. Okay, so we've done a trade at 9.28. Now we have to put her on our chart here. Today's date is May 20th. CTL. We purchased 1,000 shares. We put a minus. And I believe the price was, let's see what the price was here. Okay. Go back here to, okay. So now we got the trade down here in our box of CTL. So we put the trade in at so we ended up buying at $9.83. Okay, that's 9,800. Okay. Copy. Paste. Makes it a lot easier here. Okay, we did a call 10. $10 a share. CTL. Okay. 29th May is our option. We did 10. And we got to pay a premium. Of $190. No, that's a value of $190. Okay, it was 200. It was $200 was our premium. Actually, it was worth. Look at that. It's already up $30. What did we get this puppy at? Hold up. Oh, we got it at 22 cents. Interesting. Hold on here. Let me look at the order status. Oh, whoa, they gave it to us at 22 pennies. Shoot, they gave us $220. Oh, we picked up an extra 20 bucks. Okay, got it. All right, now I'm tracking. Okay, wait a second. Man, we just jumped up. Now we're at 24, 840, 854. We jumped up another 200 bucks. Okay, interesting. Okay, there's our cash positions. Let's go back. Okay, so what happened here was we ended up picking it up. The option, they paid us $220, not $200. So they gave us an extra $20. That's why I was trying to figure out why we're already up 8.66% against the option of $25. But then, wow, this is interesting. Okay. All right, one quick second here. All right, let me bring in our other chart, option tracker. Hey, we'll put in $220. Not a problem. That's better than $200. I'll take everything we can get, right? That's an extra 20 bucks that we didn't think we were going to get, okay? But then again, you know, like I'm saying, that the price did jump up a little bit there. So we just got to be aware of that. But it's okay because some good news came out yesterday on the stock, so I don't have any problems with it. We are finished here. Okay, we just have to save this, save our spreadsheet. Maybe we need to put this in a different color here so we can track, you know, so we keep an eye on it. Let's put in a blue. There we go. It's a different stock. Should be a different color in here. Okay, so we're looking good here. We got to figure out what our investments was. We got $9,830 as an investment. Now this is just like buying a piece of property. You bought a house for $98.30. Okay, and what you're doing is renting it out. So we rented it out for 10 days for $220. Now this is a very cheap house, okay, but we're renting it out. So let's see what our return is going to be on this puppy. Our return is going to be let me copy this here. Okay, 2.24%. Okay. All right, that's going to be our return. Now, if we don't get called away. Now, if we get called away, all bets are off. If we get called away next Friday, you got to take this number here and subtract it by the strike price of $10. Okay. That'd be 10,000. Subtract 9,830 equals $170. So $170 plus the 220 equals $390. So then we divide that by our initial price that we bought the home. If we end up selling the house, so we bought the home for $98.30 and we end up selling it for $10,000, we're getting a 3 6.97% for 10 days. 10 days. Now remember, we're trying to beat our CDs here. And what did we do? We took 98.30, and if this thing gets called away in 10 days from now, we pick up almost 4% on our money. That's 50 basis points from what we were getting on our CDs at 3.5% before. And we did it in 10 days. Now come on, folks. You know, there's opportunity here. Now, can this price go down? Yes. But we get to keep this 220. We pick up our 2.24%. But we get to keep our house. Our house is not going nowhere. And remember, we get a 10% dividend on this house. We're going to pick up $1,000 off this house. Okay? And if the dividend goes down, maybe we pick up a little less. But we're going to be selling more options against this house. Why? Because we like the house, and we're going to keep the house. And the price went down. That's it. We had to take it off the market, you know. But we're going to get paid rent in the meantime. Instead of selling the house at $10 a share, you know, nobody wanted to buy it. That's okay. We'll take it off the market. We'll rent it out again. Okay? Now, I hope you understand the concept that I'm trying to portray here. Remember, this is not a retirement account here. This is money for cash. Let me show you the balance, and then we're going to cut this puppy short. Okay, we picked up our dividends of $305, which is great for this position. And we're not doing anything else with ET. Remember, we got that one option that's going to be called away. Friday will be the last day we'll look at it, and we'll figure out what we want to do. Look at the account balance here. Whoa. You know, we did start off with 24,000 something, and we're doing pretty good here, I think. But remember, it's the stock prices that are going up. And because the stock prices are going up, it's inflating the market price. And remember, those options, too, is also inflating. It's also moving. So this price is a moving number. Okay? So don't always believe in that price there. I always believe in the other price. All right, I appreciate you guys all for staying on the call. Sorry it took a little bit longer today, but I'll try to trim some of this stuff up so it'll be a lot quicker. If you guys have any comments or suggestions, please write them below. Okay, now remember, folks, we need to come up with another stock because we're gonna be called away this weekend on ET and collect our 2.3% return on it. So we're going to have to look for another replacement for next week for Monday. Okay, I'm going to do these videos for Monday, Wednesdays, and Fridays, or unless there's an emergency that I need to change something. Okay. Again, please click the like button and subscribe so you can get all my updates. And I appreciate it. This is Sonny. You guys have a good day, and thank you for what you guys do. All right, Sonny out.